Hello everyone, welcome to another QuantInsti webinar. I am your host Kshitij Maurya and today we have an exciting topic to explore which is unlocking the power of machine learning in trading. Our session will be guided by an expert in the field, Varun Kumar Puthula, a quantitative analyst at QuantInsti, joining us from the beautiful city of Rajamundry in Andhra Pradesh, India. Varun, we are thrilled to have you here with us today. How are you doing today?
Thanks, Idit. I'm doing good. Hope you're doing great.
Great. Yeah, I'm doing great. Thank you. So, before we start, let me introduce Varun more comprehensively. So, Varun holds a master's degree in financial engineering and brings a wealth of experience to the table. Varun has worn multiple hats throughout his career, serving as a trader, global macro analyst, and algo trading strategist. Presently, he is a key member of QuantInsti's content and research team, where his contributions play a crucial role in shaping the offerings for learners in the field of algorithmic and quantitative trading. Now, before we delve into today's session, uh, please keep in mind that we'll be addressing all your questions at the end of the presentation. So don't hesitate to share your doubts in the questions panel. Also, remember that this session will be recorded and made available on QuantInsti's YouTube channel for your reference. Uh, without any further delays, let's straight jump into today's knowledge packed session on unlocking the power of machine learning in trading with Varun. The stage is yours.
Thanks, Idit. Thanks for the introduction. Welcome, everyone. So let's go through the agenda of this webinar. Uh, we're going to start the webinar with a bit of an intro to machine learning, and then we discuss on need for machine learning in trading, like why exactly are we discussing this concept, machine learning for trading. And we will also explore several machine learning algorithms, like what are the different approaches you can take using machine learning. And post that, we are going to see what are all the practical applications of machine learning when it comes to trading. And once we realize the applications, we'll see how a typical trading system looks like when it is built with machine learning in the heart. And post that, we will see once a trading system is built using machine learning, how do you evaluate that? And also, how do you implement the same to the live? And we will end the session with an interactive Q&A. So for this webinar, I've taken this course as a reference, which is Python for Machine Learning in Finance. So this is one of the 50 plus courses we have in our Quantra environment. So let's move ahead. But before that, I would request Sitish to launch a small poll so that I can understand the audience better and pace this webinar.
Sure, Varun. So the question is select one of the following. Now, you have experience in algorithmic trading, or experience in machine learning, or experience in application of machine learning in algorithmic trading, or you have no experience in algorithmic trading or machine learning. So, uh, I think I would wait for 30 seconds for all of you to answer this poll. 20 seconds in, and we have got responses from almost 60% of our audience. We'll wait for 10 more seconds and then we will close the poll. All right, so we have more than 75% of the audience responses. So let me close the poll now and share the results. So as all of you can see, most of us are here 35% with no experience in algorithmic trading and machine learning, and 26% each who have experience with either algorithmic trading or machine learning. And we also have 14% of the audience who have experience in application of machine learning and algorithmic trading. Over to you, Varun.
Thank you, Siddesh. Thanks everyone for participating in this call. Uh, since most of you guys are new to machine learning and 35% are new to algorithmic trading as well, I'll take it slow. I'll try to make it more intuitive. I'll try to give more intuitive examples for each of the concept. So let's move ahead. Let's start with the basic one. What exactly is machine learning? So you must have heard, generally people use the terms AI and machine learning with the same meaning, but that's not exactly true. Machine learning is a part of AI. So this is the scheme of things, how they are divided. Artificial intelligence is a bigger picture. Basically, it talks about ability of machines to behave like humans, be it taking decisions, be it understanding a scenario. So that's about artificial intelligence, but machine learning is a part of artificial intelligence, which exactly deals with learning, as the name says. So it is a combination of methods, etc., to teach a machine or develop the ability of a machine to learn from whatever concept, whatever data you give as an input. And deep learning is again a part of machine learning. It's a special technique of machine learning where neural networks are used. You must have already heard about the term neural networks. So it's almost like that. It's a combination of nodes and layers, which is almost similar to schema of human brain, where the complete process is different from other machine learning techniques, where it is a reward-based learning system. We're going to discuss about these in bit more detail as we move forward. But here the main key takeaway is machine learning is a part of AI, but both are not exactly same. So let's move ahead. So to summarize, machine learning is a subset of AI which actually learns from the data, and also according to its learning, it will help you to make predictions, or rather I can say it will make predictions and also help you to take certain decisions based on those predictions. So this is about machine learning, a bit of an intro on machine learning. Now, with this in mind, most of you guys already know what trading is, and or as if you're not initiated, maybe you're interested in that. Now, let's see why exactly are we trying to implement machine learning in trading? What is the need for it? So basically, there are four major needs. So the first one is it's going to help you to take better decisions. It's going to improve your decision making. So especially when it comes to algorithmic trading and especially for machine learning, so each decision is taken through data. So all insights you're going to get from machine learning algorithm is data driven. So which is the better way to take decisions instead of banking on your intuition or instead of banking on others' opinion. If you bank on data and if your insights are data driven, that's going to improve your decision making and in turn let you take better informed trading decisions. And also it's going to help you to assess risks better, because when you're using machine learning, it's very easy to tune your machine learning algorithm so that it adapts to the real-time scenario and gives you information on real-time risks. So based on that risk assessment, you can improve your trading decisions. This is one of the major advantages of implementing machine learning for trading, which is lacking in manual trading, especially or statistics based trading. And adaptability. Again, when you create a machine learning model and when you try to integrate with trading, so one important aspect of trading that's going to help you to trade better is like understanding the current scenario, especially if you take an example of intraday trading, or if you go to extremes, maybe high frequency trading. So it's all about how well you're understanding the current scenario and adapt your trading behavior or the strategies accordingly. So this is where machine learning shines and help you to take better decisions for trading. The second reason why we are implementing machine learning for trading is increased efficiency. So this is self-explanatory. First of all, be it algorithmic trading or especially machine learning based algorithmic trading, automation is the strength of that particular environment. It's very easy, or it's straightforward for automating the trading tasks, be it your research, be it analysis of your trade, or be it performance of a trading strategy, or post-trade performance analysis. All these things can be easily automated, and their efficiency can also be improved by implementing machine learning. And not only that, yeah, so you can actually deploy it around the clock. So there are certain assets or markets which are open around the clock. And also, if you are a manual trader, you're very limited because you can only trade certain number of assets and you can only be exposed to limited number of markets. But when you automate using machine learning, yeah, you can actually stretch that, and you can expand this across assets and across the time zones, which eventually increase the efficiency. And the third point is enhanced accuracy. Again, when it comes to trading, accuracy is something not everybody takes it very seriously, because yeah, we can't accurately say what happens in the next moment or the next day or the next month. We would take a calculative bets. But what if you have a system which is going to help you in that aspect as well? Because if you are a manual trader or an algorithmic trader or a non-ML based trader, accuracy, you would think about accuracy as a last step. You wouldn't think as an accuracy as a part of your trading strategy or a trading system. You would think about it when you're understanding the performance of a strategy or your portfolio. But when you are creating a trading strategy or a trading system with machine learning, accuracy is an integral part of it. Just like any other machine learning, even for application in trading, accuracy is important, and it's going to enhance the accuracy of the overall trading system, be it the performance or be it the research you are doing using machine learning. And especially predictive analysis is a big part of application of ML in trading. So predictive analysis, as the name says, you're going to predict the behavior of the data. Especially in trading, people are trying to predict the returns for the next day, or predict the volatility of the next day or the next month or any trading time period. And you basically want to predict the behavior of the market, and based on that, you're going to generate your trading signals. So if there is a chance to increase the accuracy, that's going to definitely help the performance. Hence machine learning, there is a need for application of machine learning, because there are certain algorithms and also standard pipelines that are developed in machine learning which focuses on predictions basically. And again, most of you guys would have already realized, if you are active traders, human bias is something that can sometimes make a trade sometimes helpful, but most of the times break a trade, because it's a mix of emotions. People say greed and fear, but it's not limited to greed and fear. There are many things. You might be tired, you might be not active as you were the last trading day, and your enhanced ability to understand the current scenario also is not constant. So that is what human bias is. But if you automate these things, what are the decisions you're going to take or the research you're going to take, it's going to definitely help you when it comes to performance. So that's what machine learning does, is absolutely removes the human bias. Yeah, we can say reduced human bias, but the goal is to completely remove it when the algorithm is live. And this is the reason why it is set to increase the accuracy. And the last one would be, which is a bit obvious as well, which is automation and scalability. So this part, automation and scalability, automation, of course, when it comes to algorithmic trading, automation is integral part. But when it comes to machine learning, you can automate more steps of your research or trading, because during algorithmic trading, yeah, most of the algorithms can be automated. That is there, but machine learning gives you more tools to better does that automation, and also better does the analysis of whatever scenario the current research is or current trading is. And importantly, it will help you to scale the strategies easily. What do you mean by scaling? So this is like this. Let's say you have a trading strategy and it is working in one of the stocks, let's say one of the banks. Now, if you want to implement the same trading strategy across the bank stocks, yeah, that is called scaling, and you can easily do it with machine learning. And you're not limited to the same sector. You can definitely scale it across all the stocks in the exchange you're trading, and you can go beyond. You can also try the same strategy in different assets as well. you're trading in equities, you can also try options, you can also try commodities, forex, etc. You can also expand through exchanges and through time zones, or I must say through different countries as well. So if you have a trading strategy which is working well in equities of India, and if you want to scale it and expand it to some other trading zone, let's say US, you can do it easily with machine learning because all the processes or most of the processes are easily scalable. And when it comes to strategy, if there is a chance to scale it across different assets, that is additional power you could give to your portfolio. And consistency. Uh, these days all machine learning systems are robust, and especially the methods you are used to uh, you can say methods you can use to confirm the accuracy or confirm the error free rate, you can say. So there is less error free rate, and you can say that there is a consistency of performance you can bank on. This you can't do when you are a manual trader, and especially if you're not even using algorithms also. With certain algo trading systems, measuring the error rate and also making sure the consistency of performance is maintained. So it is very easy with machine learning, and it's one of its strengths. So for automation and stability, machine learning is needed, especially when it comes to trading. And yeah, portfolio diversification, as we were discussing, if you want to diversify across assets and across or beyond the exchange or the country you're trading in, so there are standard methods in machine learning which you could use, and yeah, which have been like built across decades. So these are the four main reasons why machine learning is used in trading, or why there is a need for machine learning in trading. Uh, Now let's go to the important part. Like let's understand different machine learning algorithms. I'll take it a bit slower from here so that you can get the intuition of what are these different approaches. Um, so basically, there are three majorly different ways the machine learning is divided. So the first one is supervised learning, and the second one is unsupervised learning, and the third one is reinforcement learning. So before we study what exactly is supervised learning, so let's understand, let's take a scenario. Let's take a scenario like, let's say you are trading in an exchange which has 2000 stocks, and but you don't want to take all the 2000 stocks and analyze, or you don't want all the 2000 stocks to be your universe. You want to tone them down to particular set of stocks. If this is a problem statement, and if your approach is to trade on highly volatile stocks, so general approach would be to label them, like out of these 2000 stocks, there are certain statistical methods you can use. But when it comes to machine learning, you can actually train your machine learning model to identify the volatile stock. So we are going to get in more detail of what are all the integral steps to do this as we move forward. But when it comes to supervised learning, when you input the data into your machine learning model, you're going to label it. If you want to classify your stocks into volatile, highly volatile, low volatile, high momentum, etc., etc., you will, for supervised learning, you would initially label the data, label the stocks according to your categorization, and then pass it to your model. So that's the primary reason why it's called supervised learning. So you supervise initially in the training phase itself by labeling them. So it's all about label data when it comes to supervised learning. And based on that, you can train your model to do its predictions. And it's widely used in trading. So in general, certain problem statements would look like, shall I buy or sell a stock? If you want to do this, you will initially take the historical data, label them as buy and sell as per your convenience or understanding of the market, and let the machine figure out why this is labeled as buy and sell. Once the machine figured that out, the next step is to use it in live. You can pass the data that was never used, and machine will be able to label them for you. You're going to see these process in detail, but the important part of supervised learning is that we are going to use label data. Now, the other type is unsupervised learning. As the name says, we are not going to label our data while you're giving that as input to your ML model. So this is basically used to find patterns in a data. For example, I don't want to label the, let's say I want to create a portfolio, but I don't know. I don't know how to divide the 2000 stocks I have into, let's say, different categories. So every stock has its own characteristic, and to group them with our convenience with the economic theories, etc., we generally divide them into things, let's say high volatile stocks or trending stocks or seasonal stocks, etc. But there might be other categories that we are not looking at right now, which could open doors for better portfolio creation. So you can definitely use machine learning for that. And especially there is a technique in unsupervised learning, which is called clustering, that is widely used. So basically it will cluster the stocks into similar groups. If you want to cluster into 5 different groups, it's going to divide your 2000 stocks into 5 different groups. Later, once the groups are divided, you can study their characteristics and understand why these are grouped together. And this is generally used for portfolio construction. So this is a major change between supervised and unsupervised. In supervised, initially itself, you're going to tell what are all the labels of the data and how are you going to tag them. But in unsupervised, you don't do that. You let the machine figure out the patterns in the data and let it divide the data or the stocks, as an example we gave, into different groups. Now comes the interesting type, which is reinforcement learning, which is a bit different. You can also name it as reward based learning, where you're going to configure your machine to take certain actions, and based on the outcome of the action, you're going to decide the reward. It's almost like training a child. Like if there is a human child, you're going to reward it or punish it based on the actions it takes as the baby grows to an adult. And in mind, as humans, we generally tend to do actions which are going to give you more reward and less punishment, right? So that's in a most simplistic way. That's what happens in machine learning, especially in reinforcement learning. And in the reinforcement learning, you hear these terms called state, action, reward, environment, which are important part of reinforcement learning system. So take this example where there is a reinforcement learning agent and it is taking certain actions. For example, right now, there is a state, the market state is passed in and it took an action of buy and it got a reward of 0. Now it's going to make a note of it and take another action. Now currently, it's the next action could be sell. Initially, it took an action of buy as per the current state. It got a reward and it made a note of it. And once other state is passed, now it is selling the position and it got a reward of 2.1. So this is repeatedly. It's going to take certain actions as per the state of the market, and it's going to note down the rewards that it gets, and eventually its whole objective is to take actions in such a way that the reward is maximized. And when we create a full-blown trading strategy based on this machine learning type, which is reinforcement learning, this is how it looks. As the market is developing, the reinforcement learning agent is taking certain decisions and it's also recording certain returns, which is a reward for it. And eventually it's going to train in such a way that it's going to take buy or sell action so that its reward, which is cumulative return as mentioned here, is maximized. This is exactly what we need when we train a person to be a trader, or when we are optimizing a trading strategy to become more profitable. We want it to give us more rewards. So as you could see, this is a bit different from the other methods which we discussed. These are all the 3 basic approaches of machine learning, or the categorization of algorithms in machine learning. But now, how are we going to apply this in trading? So what are all the different places we are using, or which are also in research, which are mostly in live? Most of the things we are going to discuss now are practical oriented, which are already there. So when it comes to application, again, I picked like 4 major applications which are in live and which are being used in everyday real life through different exchanges and by different funds. So the first one is sentiment analysis and news prediction. There are certain machine learning packages, or I must say machine learning algorithms, that are especially designed to understand sentiment of a particular text, you can say. So as a trader also, this is what we do. As a trader, we are going to study whatever information we have on a particular asset, be it news, be it research reports, be it analyst ratings, etc. And we are going to decide a sentiment. Your sentiment could eventually lead to a buy or a sell position in a particular asset. So you can definitely take advantage of the advanced machine learning techniques that are there, which is going to help you to understand sentiment of news or any kind of articles or any kind of data you're going to give it as an input. Once the sentiment is calculated, you can use it to generate trading signals. I must say, generate actions like buy or sell. That's one of the major application. And the second one is for predictive modeling and forecasting. So as discussed earlier, the major chunk of machine learning, especially in the initial stages, would be to use it for predictive modeling to predict what would happen in the next moment for whatever asset you're choosing. Let's say if I'm trading in a certain bank, and if I want to know what could happen to its price tomorrow, I can definitely use machine learning for that, and I can understand, like, machine learning model can understand the patterns in it as per the model you're choosing, and it's going to forecast the behavior of the particular asset. That's going to help you to understand the market as a broad as well. It's not limited to any particular asset or any particular problem statement. You can be as creative as you could. You can also try to understand how the volatility is or forecast the volatility, and based on that you can do your calculations, or you can also create a machine learning model to understand the market phase and then do predictions based on that. You can create a ML model to predict when the market behavior would change or how it would change. So there is no limitation. It can be customized completely based on your problem statement. And the third one would be for high frequency trading and algorithmic trading. Yeah, so as when it comes to, we already discussed why we are using ML, and one of the concepts or one of the points that were added were to increase the accuracy and also to maintain consistent performance of the machine learning system. So with that, it gives you a confidence to use it for be any kind of algorithmic trading and for extreme cases like high frequency trading as well. So where it's very important to take decisions in high speeds, and since the machine learning models can be designed to be adaptable to current scenario, and you can definitely use it for scenarios where you need to react very quickly to the changes in the market. And of course the last one, or fourth major one, there are other types of applications as well, but I have accumulated only the major ones, is risk management. You can actually define machine learning systems to assess the risk in real time. When it comes to risk management, there are many standard ways to do it or standard metrics that were defined, but you can create a system in such a way that it's going to assess risk in real time for you, and accordingly you can also use ML to make changes to your portfolios. For example, a typical trader would have take an example of an intraday trader. Let's not go to high frequency trading since everybody can relate to intraday trading. Let's take an example of an intraday trader who has a daily stop loss, in the sense daily stop loss of the portfolio. Means they don't want to trade if the portfolio goes below or if the loss is more than 30%. But that's a very basic way to understand risk and also manage the risk. The better way is to use models to forecast a risky scenario. What if you have a model that's going to tell you most probably today is going to be your loss day if you're using the strategies you use every day? That means as per the current market scenario, today is going to be the day where you make most losses. If you have that information with confidence, and if you're able to create a model like that, then that's going to definitely add to your arsenal, because it's better to have something to tell you that today is going to be a difficult day for you to trade than you realizing it after losing money. This is an example I gave for the context of intraday trading. But when it comes to other scenarios, like let's take an investment like or portfolio management. In portfolio management, if you have a portfolio is not going to work or perform the same in all scenarios or all market conditions. So you can definitely create machine learning models in such a way that they are going to forecast the behavioral changes in the market so that you can make appropriate changes in your portfolio. There are many ways a risk can be defined or a risk can be assessed, especially with ML, and also managed effectively with all the pipelines that are there in ML and also the algorithms. So these are the major applications of ML in trading. And now that we understood why we are using ML for trading and what are all the different approaches and also the applications, let's see how a typical trading system looks like if it is built on machine learning. Like if you want to create a trading system by adding machine learning into its structure, how would it look like? So this is the one I'm going to present is pretty common for any kind of trading strategy or approach you're going to take. But I made it general. But let's take an example. Let's say you want to predict, you want your ML model to tell you whether you can take a buy position or a sell position the next trading day. If this is a scenario, typically just like a manual trader, you would start with the data. Even for manual trader, this is the first step, right? You would want the data. Generally people use chart data, understand the charts, and based on that they do their analysis. Let's see what we do when it comes to machine learning. If there is a machine learning trading system, how is the process different and how is the process designed? So typically, as a manual trader, you would start with this. You would take an OHLC data or be it an algo trader also. Start with the most raw data, which is open, high, low, close data. And based on that, you're going to use visual charts, or you would use your own analysis. You would apply your indicators, etc. But you're not limited to this only OHLC data. You can definitely use fundamental data when it comes to ML. You can also use economic data, be it macroeconomic data, be it data that is related to particular aspect of a commodity, especially certain dynamic things. You can use that as your input. You can also use news, as we discussed earlier. You're not limited to anything. You can definitely use all these kinds of data. You can also use social media data. You can definitely use, let's say, if you take an example of Reddit, if you are following a group in Reddit which is giving updates on a particular asset, you can definitely take that data as an input. So that this is like you are collecting data so that you can train your ML model to use this data and predict what you want to. Here we want to predict whether to buy or sell. So you're not limited to only the price data. You can expand it to any kind of data, or especially the data that is listed here. And once we get the data, we need to pre-process the data. We can't directly use the raw data we have collected. So the basic pre-processing step would be to remove unwanted observations. Like if it is a data, let's say you collected the data, daily price data of a stock, and if there is a discrepancy in the price, let's say there is no data for certain days, or the high price is not good, not well fit, there are certain outlays. All these things comes under pre-processing, or all these things comes under unwanted observations which should be removed. So there are many steps or many types of pre-processings you could do. And you can also understand the structure of the data. Generally, imagine you plotted a chart of a stock and there was an unusually big green candle. You would definitely see, right? You would see, okay, what could have happened? This happened a lot during COVID, where there were unusually big red candles that happened in charts, and you would be taken aback when you suddenly look at the chart. That because there is something structurally different. So in the pre-processing, especially for ML, you need to understand the structure of the data and fix if there are certain errors. And yeah, so that's about pre-processing. And now comes the important part, which is feature engineering. Now understand, as a manual trader, as we were discussing, you don't just understand OHLC data, or you don't just read OHLC data. You would want to make certain observations in the data. So you take help of tools like indicators. Since everybody knows what technical indicators are, or you must have already heard about it, I'm taking that example. So you're not directly just studying open, high, low, close every single day. You are either making visual representation using candles, or you are using something else like indicators, RSI, MACD, etc., so that you can interpret the behavior better. So those are called features when it comes to machine learning terminology. So once we clean the data, we are going to structure the data or extract features from that data so that machine can learn better, so that more information can be properly structured. Because from OHLC you can't get many things, like probably you can get what is the highest high, highest low, etc. 52-week high, 52-week low you can get. But if somebody asks you what is the current volatility, you might have to do certain calculation. Those are called features here. If features are created, it's going to give additional information of behavior of particular data to the model. So essentially we are converting our raw data into features, which are also called attributes. And now there are different steps here. So instead of going in detail about each of these things, essentially I'm going to show you an example. So this is the raw data. The one you see here is a raw data, open, high, low, close. And now we are going to do feature engineering where we are going to extract additional information from the same raw data. So the S3 you see is a 3 days simple moving average, S15 is a 15 days simple moving average, S60 is a 60 days simple moving average. So I have taken these features as an example just to explain you the concept here. It could be many things. So some people would use technical indicators, some people would use the return, like 2-day return, 5-day return. So you can understand this intuitively. Imagine there is a stock which is making which has a positive performance in the last week. You would definitely give it a bit of a positive sentiment, right, compared to a stock which fell like let's say 5% in the last week. So this additional information of its performance is also contributing to your analysis, especially when you're understanding its sentiment, etc. So these are the things that are called features, and you can definitely expand this feature space by using anything which you feel useful and which actually links better to your problem statement. So we're going to see an example as we move forward. We're going to go to the notebooks. We're going to see the Python code and see what features are used there. But this is to just give you an idea of how a typical structure of a machine learning based trading system looks like. And the next step would be to split the data. Again, it could be a bit technical for people who are not into machine learning, but essentially this is like this. Imagine if you are training a student, imagine you're a teacher and you are taking a class, you're taking a 6-month class for a student, and then you want to test him. So you don't want to give all the data initially, right? You don't want to give all the information while teaching itself. You would give 80% of the information, you will teach him with 80% of the information you have. And once he or she learns it, if you want to test that particular student, you're going to expose him to the new information and see how he would apply the knowledge he has gained so far. So that's similarly what we do here. So we are going to create we're going to create two data sets which are called train and test. So train data, we are going to use the data to train the model, as the name says. And once the model learns from the data, we are going to test it and see how well it is performing on the new data which it never saw. And but again, that's not the only split you do. You would also split the data into input and output. So essentially you're passing certain data as input to your model, and so that it's going to give you an output. So you're going to define these things very clearly when you are creating an ML based trading system, and we're going to see this as we move forward in the code. And once this data is split, you're going to pass the training data to your model. So I have added an equation of a model, but model could be anything. Essentially, model is going to tell you or define the relationship between the input and the output. So here the y is output and x is the input. I've taken a simple model. It could be complex or it could be of multifolds, but just for representation, ML model is going to learn from the training data to understand how the input and outputs are related. And once it learns from the training data, we are going to fit the model on test data. When we say fit the model on test data, we are going to expose our ML model to the test data to see how it learned. So once the model learned, once you study how well it learned, the next step is to take it to practice, you can use it to make its prediction. So almost like let's take an example of an ML model which is predicting next day's returns for you. Since you created a model to tell you what could be the movement the next day. Would it be 0.5% up? Would it be 0.5% down, or anything, any number? So initially, you would not expose the ML model to all the historical data. So this is 2023. Probably you could use the data from 2010 to 2020. The 10 years of data you can expose to your model so that it will learn as per the features you selected. It will learn how can it better connect the input parameters to the output, which is the percentage movement of the next day. Once the learning happens, you're going to use that same model and see how well it is performing on the new data, which is test data. Probably you could say from 2021 to 2023. The data ML model did not see it. You could use that data and see how the accuracy is, how accurately is it, and did it predict, etc. And if you're happy with the accuracy, you can use it for prediction. You can use it from the next day, because I don't have tomorrow's data. Till today's data, I use it as train and test. So if I'm good with the prediction, I'm happy with whatever the performance is, I can use a model to predict what would happen tomorrow, like what could be the percentage change for tomorrow. So this is typically what happens in an ML model, but based on those predictions, you can create your trading signal. So it could be as simple as this. You can probably in this example, you can say you can predict the percentage change for tomorrow, and you can define a trading rule. You can define if tomorrow's percentage change is more than 1%, you would buy tomorrow, or else if it is less than 1%, you would sell. As a manual trader, typically there are manual traders who generally use technical indicators and study like this. Okay, currently the price is here, the trend is so and so. What is the possible price it could go? Let's say if the price is at $100 now, and your analysis said price could go to $100.5, you might not take a buy position because it's just a matter of $0.5. But if your trading strategy or analysis said that the price could go to $110, you would take a decision. So this decision making is called trading rules. So based on your analysis, when are you going to take action, whether it buy or sell? So that is called trading signal generation when it comes to this terminology. That's not it. Well, let's go to the course. Let's see. I'm going to show you a model which was making predictions, and let's see what kind of predictions it is making. Let me navigate you to. So you can actually explore. Let me tell you how you can access this. You can go to quantra.QuantInsti, and when you can go to browse all courses, if you click here, it's going to take you to all the courses we have. But right now we want to focus on Python for machine learning. So I'm going to go to Python for machine learning in trading. So this is the course. So this is the course landing page, which essentially has all the objectives of the course and the syllabus, etc. Let me take you into the course. So I've already opened these things. So this course is a combination of different units like videos, quizzes, Python notebooks, different types of assessments, etc. And as you could see, the course starts with whatever concepts we have discussed so far are covered in this course and beyond, of course. So it's talking about machine learning, and then there is a section on introduction to Python, where if you're not so well versed with Python, you can definitely learn that for trading here. And then there are several aspects that are covered here, as we were discussing types of machine learning models, the splitting the data, forecasting, etc. So if you go to this part, this notebook, so this is the very notebook I was talking about, where here an interesting problem was handled. So this notebook tells you how a model, especially the classification model, is created, and it is used for forecasting. So here the model is classifying whether to take a buy position tomorrow or not. So that's the objective of this model. So as we have already seen in the process, you're going to when we go to data, we're going to create train and test data, and then we are going to use the data to make the model learn. So that's exactly what's happening here. We are taking test and train data and training the model. Once the model is trained, we are taking input and output of training data to train the model. And once that is ready, we are passing new data, which is test data, and doing our predictions. So you can go through this notebook. I'm going to show you the code as well right now, like what exactly happening here and whether it is following the same steps or the general schema we have seen. So ideally, you import certain libraries of Python which are going to help you for this implementation. Here we are using random forest classifier. This particular model is being used for ML, like for this classification problem. So we're going to import the models that are or the packages that are going to be used in this notebook, and then we are going to read the data. So as I said, here we are using the data, the training data and testing data for fitting the model and forecasting. So yeah, so you can go through this. I'm going to show you the results and the methods we are using. So currently, as I said, once we have test and train data, you're going to train your model. So that's exactly what's happening here. So here we have defined a random classifier and we named it as RF underscore model. And that model, we are passing our training data to that model. This is essentially where the learning happens. So the model is going to learn when you fit the training data on the particular model you define. And once you fit the data and the model has learned, and you can use it to forecast. You can use any new data. You can use today's data to forecast tomorrow. So now what are all the features that are there? You can see these are all the features that are used. So percentage change of one day means yesterday's return. So it's almost like, imagine you want to study a particular stock, and if a stock went up by, let's say, 10% yesterday, there would obviously be a positive sentiment today. So that's going to be one of the factors to better understand the or better predict its behavior for tomorrow. So in this problem statement, there are several days performance, like 1 day performance, 2 day, 5 day performance, and also certain indicators like RSA, ADX, especially correlation is also used, and volatility. So actually you're not limited to this. As per your exposure to analysis of a particular asset, you can definitely use these different types of features, and you're going to use them to predict. For example, here the model, like the test data is passed. So when we are making the model learn, we are fitting the data. So we are calling a fit method on the model, and when we are predicting, you can call predict method. So here we printed 5 predictions. So the predictions for 5 days were 0, 0, 1, 0, 0. So 0 indicates that you don't want to take any action. 1 indicates you want to take an action. So when the output is about 5 trading days, so on first 2 trading days, ML model doesn't want you to take any action, and on the third day, it wants you to take an action. So this is an example that was covered here. So essentially, this is what happens in training and forecasting of a model. And as I was saying, there are different ways you can generate signals. That's one way. Directly, the model is telling you whether to buy or sell. So it's not the only way. That's essentially what I wanted to tell you. So let me just take you through this one. So if you designed your model to, earlier in the example of notebook, we designed the model to tell you whether to buy or sell. That's a classification problem. You can also create a regression problem to tell you how the percentage change or let it predict the percentage change for tomorrow, and define your own trading rules based on that. So this is how typically a ML based trading system looks like. But that's not the end of it, right? Be it any strategy or be it any trading system, even if it's not ML, you want to understand how it is performing, and especially when it comes to ML, you need to evaluate the model's performance and then see how the performance of a strategy based on that model. So when we're talking about evaluation, it's a two-part thing. So the first part would be to understand the accuracy of the predictions. So if you are using a regression, means if you are predicting be maybe percentage change for tomorrow, or any numerical value, be it price, etc., or be it volatility value. One common way to use is, like, common method to use is R squared. So based on R squared, you can say how accurate the predictions are. And for classification, one of the ways is classification report. But these are not limited to these things. Let me take you to the course again. So as I said, this course has almost all you need to start machine learning in Python for finance and then take you till live trading. So for that reason, for example, here we have taken an example of a classifier. So you have a separate section on how to evaluate a classifier. Means how do you understand the performance of a classifier? Here, yeah, it gave me some predictions. It told me that whether to buy or sell, but how do I trust it? Like, how do I evaluate or assess its predictions? So if you go to this section, you would see a video on evaluation, sorry, evaluating a classifier, and also there is a notebook on metrics to evaluate. So I have opened the notebook already. So let me take you through. Okay, the first one is on regression. I'm going to show you. There is a section on regressor also. How do you evaluate metrics of a regressor? So essentially, this is how it is. You will define a metric to uh, tell you how accurate the predictions are. Here we used coefficient of determination, which is also called R squared. So it's going to tell you how well the predictions are. For example, we have predicted the prices of JP Morgan and Nestle separately using an ML model. And this is how the R square is. Okay, okay, just a moment. Yeah, if you look at these two predictions, this is for the first chart, the first asset, where the fit, like, R squared is 0.82. You could see the predictions are closer to the real value, which is a good sign. But whenever the value is less, the predictions are also bad. So for bad predictions, you would see the lesser value of R squared. And for better predictions, you would see the better value of R squared. So here this is an example of a regression. You can definitely have your own metrics for classification also. And yeah, this is covered in the section I was showing earlier. So you can go through these notebooks. I'm going to tell you at the end of this webinar how to access these notebooks for free. So yeah, so it's all about how you define a metric to understand the accuracy. For classification, there are several ways. You can use confusion metrics, or you can also have better understanding by generating something called classification report. So as the name says, it's going to give a report on how the classification happened. So essentially, it's going to generate a matrix like this, which is going to tell you the accuracy of the whole model. Here, the accuracy is what, 52%. And it's also going to give you certain stats on accuracy on different things. Here we are classifying into zeros and ones, which is don't take a position and take a long position. And here are the stats for the accuracy. So for more deeper understanding of how it is being evaluated, or any ML model is evaluated, you can definitely go through this particular section. But when we're talking about the basics, like when we are discussing what's happening here when we're talking about holistically in an ML based trading strategy, how are we going to evaluate? So based on your approach, be it regression or classification, you would pick a valid accuracy metric and then understand how the accuracy is. But that's not it. And of course, even if you understand the accuracy, that's not going to tell you how the performance would be, right? For that reason, you should also see the trading performance. You should also analyze the performance. Generally, you would train your model, see its accuracy, and if you're happy with the accuracy metrics, then you're going to generate signals based on that. So it all depends on how you define your problem statement. For example, if I define an ML model to directly predict buy or sell, I would sequentially do this. I would check the accuracy, and then directly I can check its performance also by backtesting. But if I create a model that's just going to tell me what could be tomorrow's returns, then from those I need to generate signals, and then I need to check the performance. So when it comes to performance, as a manual trader also, you would want to know what could be the annual returns of your strategy, right? That's exactly what you do at a most basic level. You would study its annual performance, study the annual performance of the trading strategy or the system we designed based on ML, because it's going to help you to do your comparative study. You can actually compare it with other strategies performance, or other investment vehicles as well, be it savings or be it real estate, etc., etc. But then understanding returns is not the complete approach to study a performance. You need to also take the risks into consideration and study the performance. For example, as an intraday trader, the same example we have taken at the beginning, you would focus on the risks initially. Like initially, you're going to define that I'm not going to take more than 30% of the risk. But if you want to deploy this strategy, would it actually fit to your trading needs? Is the question. So you need to study what could be the maximum loss you would get if you deployed or had you deployed this strategy. And based on that, you're going to decide whether this is a profitable strategy or not, or is it suitable for you or not, or would it need more optimization. So maximum drawdown is one of the metrics that's going to help you in that space. So it essentially tells you or shows you the maximum loss that was achieved through this. I'm going to show you in the course as well, and with an example of a strategy, how these particular trading metrics are shown. And also the next one is Sharpe ratio. So this is widely used, and this actually tells you risk adjusted returns. It's not direct, it's going to give you an information of how much returns can you expect for a unit of risk. And it can also be used for comparative study. For example, a common norm is to say that okay, it's a decent performance if a Sharpe ratio is more than 1, and as the Sharpe ratio increases, its credibility or the performance is said to be increased. But let's go to the course again, and let's see how for this the strategy we are seeing. So you can find it in the course in this section, where this particular section, where the strategy that was created using classification algorithm was backtested. So we generated certain signals. Now we used it on historical data. So we used it on historical data, and we took a trading decisions also. So my algorithm told me to buy, I would have bought it. Now, had I taken those decisions, what could be the performance? So with that problem statement in mind, you do the back testing, and you use the same performance metrics we saw in the PPT. For example, in this particular backtesting notebook, the initial step that was taken was to draw an equity curve. So basically, you can also say that the evolution of cumulative returns, how the cumulative returns changed. So initially, in the initial phases, it was not that great, it was not that bad as well. But as the days progressed, you could see how the machine learning model performed better and better. And essentially, it stopped around 27%. So cumulatively, it made 27% returns. So this would give me a holistic idea of okay, on a eagle-eyed view, what is the performance. But I want to dig deeper, and I have to understand the risks of it also. And I should also need to understand annually what happened here. Like for that, you go deeper, and the metrics listed like annualized returns you would see. And you can use certain standard metrics, or sorry, standard libraries in Python and methods to do these calculations. You can go through this notebook to understand the calculations better, and also implementation in Python. But essentially, as you could see, you can also use maximum drawdown as we were discussing. Since Python is very powerful, and you can definitely use it for visualizing the performance, especially this plot tells you the maximum drawdown. Like for from this plot from 2019 to 20, had you used the strategy based on ML classification, the maximum loss you got on a single day was 8%. So this is the maximum drawdown for this strategy. And if you're happy with, or if you're comfortable with this kind of risk, you can go ahead. Or if you're not, you would retrain your model, or re-optimize, or recalibrate your input data. There are many ways to do that. And again, the Sharpe ratio was calculated for the same strategy. Here it was 2.89. So 2.89 is comparatively good. So this is what you do. You are not limited to just training your model and directly taking it live. you need to understand, you need to evaluate the model's performance and also the strategy or trading system's performance as well. Let's go to. So this is what happens in evaluation. And the last part would be implementation. So the discussion here is how do you evaluate and how do you implement. Or here I'm going to show you 4 important parts of implementation of ML-based strategy. So which should be clearly understood or continuously done when you are implementing. So the first one would be the data management. You should definitely get high quality data and also data without any gaps. And once you have the better data management or systems to have better data management, then you would deploy your model. You would seek out the ways to implement your model with the be it trading APIs or the real-time data feeds you have. In the model is deployed, you should continuously monitor it, just like any trading strategy which needs continuous monitoring at regular intervals. You would also monitor the performance of your ML based strategy continuously and make changes accordingly. If your model is not working well, then you can definitely like delist it and then trying it again and use. And again, you should definitely follow the regulations before implementing any kind of model. Especially for algorithmic trading, you should definitely know what are all the financial regulations with the compliance and the regulatory bodies, and accordingly you should stick to that. So that's pretty much it for this webinar. And this is exactly what the course we have seen now. So you can log into, I'm going to just show you how to access this course and we can end this. You can go to our Q&A. So you can go to Quantra at the rate of QuantInsti.com. I'm just going to log out from my account so that I can show you the fresh user. So I can go to this particular platform and I can search for the course. So Python for machine learning in finance. And we have enabled a free preview for you guys. So you can click on this button, free preview, and you can register. You can register to this portal, and then you will be taken to free preview. So I have taken free preview. This is how it looks. So you will be given access to or a limited access to all this content here, and the concepts we have discussed today, like training and forecasting, you can access that, which is you would have access for that in free preview. And also you can also explore how to evaluate a classifier, all the things we discussed today. So you can also do strategy backtesting. You can check the notebook or you can check the code. Need not install anything. In our very platform itself, you can run it on Python. You can do it in this particular platform itself. You don't need to do anything on your local system. So yeah, so that's pretty much it. So all the very best, and let's go to our Q&A now. Let me pass on the mic to Sidis.
Thank you for this wonderful lecture. And I will now request everyone to put their questions in the questions panel. Though we are about at the end, but we'll spare a few minutes, like 5 to 10 minutes, to answer some of the questions. I see there are already certain questions which I have flagged, so we can pick them one by one. But before we start off with the questions, and you guys are putting those questions there, I would like to also highlight the Contra flash sale. So today's webinar registrants can avail additional benefits of on top of the 75% flash sale offer that is going on. So for the next few hours, you can take advantage of the following offers. So basically, you can see Web 75 plus 7 for an extra 7% discount on any Contra course. I have also shared the link on the chat along with the coupon code. So please take advantage of the same. And I think we can start off with the Q&A. So um, I have shortlisted a few questions. So we can pick them one by one, Varun. So if you can see.
Thanks, Sidis. I see there is an interesting question from Mainak. So the question is, can we use basic probability and inferential statistics macro model in trading? Yes, Mainak, you can definitely use this in trading. but here we discussed ways beyond these statistical techniques. We explored different ML models. Yeah, these methods or approaches you listed down can definitely be used in trading. And the next question is by Mayank again, which is in order to do HFT, do we need to learn C++ or Python can be or normal Python can be used? So when it comes to HFT, according to the latency, C++ is used widely used. Python is used in few places of HFT, especially for analysis and research. But when it comes to implementation and when it comes to trading strategy or trading systems, so C++ is widely used. Hope I've answered your question. So the next question is by Insan. Is it a good idea to rely on AI signals? Again, as we discussed at the beginning, the strength of AI lies in data-driven insights. We should also think in that terms. Let's not trust anybody. Let's understand through statistics. As we discussed today, any AI signal, you need not directly trust it, or you should first evaluate the model performance and then evaluate the strategy performance and go with the numbers. If the numbers are the backtest is good, then there is no reason to not use or not rely those signals. So the next interesting question is by Mayank. What are the sources of such historical data for OHLs? So you can actually explore it. You can explore your brokers API. There are many brokers who are giving data as well, and there are many data vendors too. And there are certain Python packages also like Y Finance, which is by Yahoo Finance, which gives you data, but you should actually check the reliability whether when you're using it for live. But these are all limited. When you're using free data sources, you can use it for your backtest, but for live trading, you should definitely subscribe to a data vendor. Most of the cases, most of the brokers provides their APIs to deploy your ML models. So the next question is by Mr. Pavan. From where I can get to train the model? Please share some free and paid sources. So Pavan, yeah, you can definitely look into the course that was shown, which is Python for Machine Learning in Finance. So where this part is covered. Or you can also explore a course called Introduction to Machine Learning in Trading. So you can also look into that course. So Introduction to Machine Learning in Trading, where this part is more detailedly covered. And the next question is, please tell how to use ML models for high frequency trading. So again, here we didn't completely focus on high frequency trading in this webinar, but there are several ways. It completely depends on what is your high frequency trading goal and what kind of algorithms you're using. Are you using predictions? So on top, the models are like prediction models, but for high frequency, there are more nuanced and they are more detailed. So it depends on, again, your problem statement and your goals of trading as well. So I hope I've answered that question. So the next question is by Mr. Krishna Kumar. Which ML models are mostly used for predictions of real-time stock prices? So ideally, people predict the performance or predict the returns, but not exactly the prices. But in any case, if you want to predict a numerical thing like prices or be it returns, etc., you would use regression-based models. So you wouldn't use classification models like the example we have seen, which was predicting whether to buy or sell. That's not what you use. You use models that comes under regression. So I hope that was answered. And so another interesting question is by Mr. James. How to build a trading system of stocks or crypto portfolio using the course? You can go through the course, James. You can take a free preview and look at it and understand, because all the like the course actually starts with introduction of these models, and then it starts with problem statement. Okay, the problem statement would be to predict whether to buy or sell a particular stock. So that you can explore. But if you want to explore applications of ML in portfolio, you can look into a course called Portfolio Management using hierarchical risk parity. So I can actually quickly show you. So this is the course you can look into if you want to explore ML for portfolio management. So hope you made a note of it. And I guess we have covered almost all questions.
Yes, so thank you so much, Varun, for taking out your time. And to all audience, thank you so much for joining in today. In case any of your questions were unanswered due to limited time we had, please make sure that you share at the end of this session in the survey that you are going to get. And with that said, I would like to say thank you again, and I'll see you soon in the next webinar. Thank you, everyone. Have a great day ahead. Thanks for
Thanks, please. Thanks everyone for attending. All the very best.